My screen.
Yeah, we can.
All right, cool. All right, let's get started. Here's going to be the backdrop for today's call. First, we'll go over. I want to break everything down for you all in detail, the fundamentals, starting from top down. Break down the reaction that we had this rising from the deltas and the dark pools. We'll discuss Nasdaq in detail. I'll go over my positions. Um, we'll leave the floor open for trade talk on Nasdaq if anybody has any questions from today's positions or wants to ask questions about what trades I took. Or I know that there was a loss today that was shared in the chat, so we'll go over that. Take a quick throat shock for a break, and then I want to roll over and actually show you all how XRP had almost similar price action to Nasdaq, primarily because yesterday I was DM'd and somebody said to keep breaking down day trading XRP setups because they're day trading XRP. So I want to break that down for you all in detail. We'll take a look at the reaction from the dark pools, go over how you could have anticipated some sells today on XRP. And then I want to roll over and just do some trade talk. Leave the floor open for discussion. Camille had shared some screenshots from the War Within document, the psychology document that I sent to you all. And I want to highlight just some of the screenshots and just read them. And then if it sparks conversation, then feel free to jump in once we get to that point. So it'll be a lengthy call today. A real fast for anybody that is trading on Top Step that's profitable or at the point where they're taking payouts. Yesterday I tested out the AeroPay instant payout. So it works. It's like super fast. So I would choose that instead of the WISE payout. The WISE payout, depending on when you request the payout, whether it's in the morning or in the afternoon, takes anywhere between 1 to 3 business days. The AeroPay is easy to set up. Yesterday, I connected my bank account to it, and literally after requesting a payout, it was literally like that instant into my bank account. So I just wanted to show you guys that it works. So anybody that is in the process of possibly requesting or close to requesting a payout on Top Step, that is a safe, trustworthy way to get payouts instantly on Top Step. Because somebody had asked me yesterday, which one I chose, whether it was Wise, Banked, ACH Transfer, or AeroPay. And yesterday I tested out the AeroPay. So this Friday I'll probably do another withdrawal from my other accounts now that I know that it works. All right, starting from the top down, these are going to be the 3 trades that we're going to go over today. These are the positions that I took. I want to break them down for you all in detail. This is right now on the 30 seconds chart. We'll start from the 15-minute and work our way down. But before we do that, of course, right, we want to touch briefly on fundamentals because, as always, I try to give you all the fundamental backdrop for the day. The primary thing that I was seeing in regards to today's fundamental sentiment, especially in regards to what I sent you all this rising, albeit it was a little late than I usually do, it was at like 8:10 a.m. my time. Um, Excuse me, I had to get some things ready in my house for my daughters to be here today, breakfast and whatnot. Um, so it was a little late on my part to send that information out to you all. But nonetheless, what I was seeing is that there, even though it was market euphoria yesterday surrounding the Iran and the United States peace negotiations and agreements that are set to be signed and come into fruition possibly on Friday with the Strait of Hormuz opening, oil prices coming down, and so on and so forth, all that euphoria that we saw yesterday, there was no continuation in that euphoria today. There was no announcement today that continued to propel that optimism forward. And now we're kind of in this wait and see mode. So here's one article today that I found that kind of hints at that. It says, many questions remain. Right off the bat, that opening statement right there hints at uncertainty. As the U.S. and Iran prepare to formally sign a memorandum of understanding later this week, says Paul Musgrave, associate professor at Georgetown University in Qatar, one of the biggest questions I have is whether Trump can keep Republicans on side to sign a deal that would be acceptable to the U.S., or whether he could have some sort of terms that are necessary to get a deal done, but would be poisonous to the U.S. at the domestic level. Another big unknown, so there's another uncertain vocabulary word, is whether Israel's Netanyahu will abide by the terms of a deal to which he is not a party of. Adding that including Lebanon in any deal is something where Israel has significant leverage in terms of unilateral action. The largest concern, so there's another bad vocabulary word, is what is going to come of this deal, said Musgrave, adding What is not being said during negotiations is just as important as what is. And so this rising, I kicked out this report to you all, where I said, even though markets are responding extremely positive to the latest developments surrounding the US and Iran negotiations, investors should be careful not to confuse optimism with certainty. And this is the report that I chucked out to you all this rising before the market opened. The Nasdaq surged towards 30,900 and the total market crypto market added more than $60 billion yesterday in value as oil prices collapsed and bond yields moved lower as traders rushed to price in a scenario where the worst geopolitical risks have been avoided. However, beneath the surface, there are still several unresolved issues that could determine whether this rally has staying power or whether markets have gotten ahead of themselves. And so coming into the New York session, that was my mindset today, is that there was no sentiment that continued to propel risk assets forward, and we were likely going to see some profit taking ahead of major events. One being, of course, the FOMC meeting tomorrow, where we have Kevin Walsh speaking for the first time as a Fed chair, as the new Fed chair. And of course, we have the possibility of the agreement, right? In between now, even though the agreement has been announced to be signed on Friday, there's still a bunch of room in between for escalations, any type of unresolved tensions, any disagreements between Israel, Iran, and the United States to unfold. And so that leaves a pocket of uncertainty between now, tomorrow with the FOMC, and Friday. So coming into today's session, I saw that to be the case. And so for me today, because there was no continued optimism and fundamental backdrops, today I was thinking, great, yesterday the market got euphoric over the rally and priced in way ahead of its time what's possibly set to come into fruition maybe tomorrow at the FOMC and also tomorrow, or excuse me, heading into Friday with the signing in Switzerland of the peace deal negotiations. But there was no continuation in that sentiment today. Let's see what else I wrote down in here. I talked about Kevin Warsh, so just make sure that you guys understand the if-then scenarios. One thing that I'm going to be paying very close attention to tomorrow is we most likely know that Kevin Warsh is going to come out leaning more hawkish, right? He's probably not going to leave the market under anticipation that the Fed's in a position to be able to cut interest rates. Hopefully, he comes out and he digresses the expectation of rate hikes, which would be obviously, of course, positive for risk assets. But nonetheless, the key thing for NASDAQ that I'm going to be paying attention to is if he mentions any technology investment and AI productivity gains, right? So I wrote about that in this report that if he mentions that, a strong economic environment, he talks about positivity around AI driven, um, you know, businesses and enterprises, even if he comes out hawkish leaning, which could weigh on digital assets and crypto because crypto moves more respondent to liquidity conditions and easy monetary policy, it could still propel stocks and NASDAQ higher. So just be mindful of that. Make sure that you guys are reading this and you understand those if then scenarios. All right. So that obviously, of course, always plays into my analysis for the day. The fundamental backdrop was uncertain. There were no continuations in the market sentiment from yesterday, today, and there's a whole pocket of a few days of uncertainty. Plus, on Friday, there's going to be limited trading hours because Friday is the Juneteenth. I don't even know what the heck it is, the Juneteenth holiday or whatever it is. You guys know I don't celebrate Hallmark holidays, so nonetheless, not only is that happening on Friday, but trading hours are going to be limited. So there's going to be a bunch of things that the market makers are going to price in prior to those trading hours. So there's going to be a lot of things they're going to feel like you have no idea what's going on. For example, today, 110% NASDAQ traders got caught off guard with this massive decline in price, especially considering the euphoria that we saw yesterday. So now that the fundamental aspect is out of the way, that's kind of what I was seeing heading into today's trading session. Now let's start to apply logic, right? Always fundamentals, logic, deltas, dark pools, technical analysis, and if you have access to order flow, right? But starting from the top down always and working your way to build a certain set of confluences, a certain set of things in your corner, like it's a coach, right? You're in a boxing ring, you're going into box and you come back after the first round and your coach starts talking to you about all these things that he's seeing you do. You want to start to build the same things when you come into the market to fight, right? So from the top down using logic after fundamentals, we know coming into today's New York session, which opened at 8:30, so here in this area, we had all of this price action to determine and analyze prior to the New York session open. So prior to us facilitating our capital into the market to trade against, or sorry, not trade against, but trade in tandem with the market makers, we had all this information to tell us what's going on. So first, right, using just simple logic, if the market is going to continue with the bullish rally from yesterday, New York session is most likely inclined to do what? To buy at a discount. They're not going to likely buy from a premium. And so what I was seeing is that this is the London session's high. And from London session high prior to the New York session open candlestick, which is right here at 8:30, we broke two previous session bases on the 15-minute time frame and violated the 15 EMA. Now we know when we're looking for buys, as above, so below, those are confluences for us to start to consider that this is volume that we should be paying close attention to. And so as you guys can see, flipping my charts right side up, we sweep a low, we shift momentum, break two previous structures, and we violate an EMA. So instantly what I was thinking coming into this New York session is sells. Until this sell volume is engulfed with buyers and buyers turn the London session highs into support, I was instantly thinking New York session's probably going to at least dump back down into where they bought from yesterday, which is this base here, right? This is New York session's open yesterday. Here's the 8:30 a.m. candle. They dropped price down into a slight discount, and then they bought aggressively, right? So that was my overall logic behind today's trade coming into the New York session open. I had identified the London session highs, simply just taking a box tool, highlighting the top of the wick down to the body of the candle and extending that over as my sell base that needed to be broken before I started to just aggressively buy. Then, of course, I highlighted one of the London session midterm lows here in this area, which you can see was violated prior to the New York session. Then we had a Asia session rolling over into London session low that was also violated. These were the last two higher lows that took price up into the dark pool at the 39.51, and the delta, which coordinates were for this delta, the 38.92 and the 31.046. All right. So with all those markings in mind, now coming into the session open, what else can we see that also hinted at sells today on the higher time frame here in this area? Kind of a rhetorical question. You don't need to answer that out loud, but we also see on the 15-minute time frame, the moving averages starting to converge and roll over, right? We know that these moving averages tend to act as support and resistance. And so if on the 15-minute, again, using logic, New York session was buying from all the way down here, price is similarly at a premium, it's rejecting not only dark pools, but also deltas. We've seen sellers now engulf two previous buy bases where there have been no bullish reactions from this, which has resulted in an EMA crossover and a break of the 50. Now we can start to say to ourselves, if we do not see buyers making a formal attempt to absorb the sell volume and start to break back above the dark pools, back above previous supports that are now acting as resistances, then the path of least resistance is to the downside. And that was my thesis coming into the session. So now that you guys can see my markings, let's just thoroughly talk through what I was kind of seeing on the lower time frames. All right. Don't forget, as we jump down to the lower time frames, these 15-minute boxes, they're going to remain gray, and watch how they correlate down to the 1-minute chart. Okay. So my thesis coming into today's session was I'm only going to buy if we can see these 15-minute bases start to turn back into support, if we can start to break back up into the delta, which again comes in at the 38.92 and the 31.046, and if we can see price trade back above London session highs and turn these dark pools into supports. Those are going to be the three to four things that I'm looking for to switch from my sell bias to a buy bias. The only other thing that allowed me to take buys today was if those things happen, or if price comes down into a New York session discount from where they bought from yesterday, which again, remember, was this gray box to the downside. All right. They were buying from the 3,600, and we'll get to that in just a second when I cover my buys. All right. So now we can see on the 1 minute time frame how after the open, price reacted to the 15-minute areas of interest, keeping in mind that not only is this gray box a previous support that we can now see is acting as a resistance, but it also coexists with the bottom of a delta, which you can see right here. And so right at the open, here's the 8:30 a.m. open. Late sellers are trapped in the market, and we start to see some profit taking unfold from all the sellers, most likely that were selling from the dark pool all the way up here. We can tell that this is just profit taking because, again, on the 15-minute time frame, we are still operating in this A to B move, keeping in mind that this was the last support rolling into the Asia to London session on the 15-minute time frame. You can see how that structure was violated. So this is now our new bearish leg from here down into here. All right. So as long as price is trading in this range, which broke previous 15-minute areas of interest, we have to assume that the path of least resistance is to the downside until these previous areas act as support and price starts making bullish order flow above the delta. And we did not get that today. We got the opposite, right? So sure enough, after the open and after I had seen that this was likely just an internal liquidity pocket, considering that we're still operating in this A to B move, I was looking at these highs as areas that market makers could sweep to take liquidity to then move price action lower. So once price came up into the delta, now we'll get into the delta held pattern. So keeping in mind that we're already operating in a bearish leg from A to B on the 15-minute. Now watch how price comes into the delta and look at the reaction. All right, we see a delta held pattern. So here's a high. After that high is taken, which we can see here, we see a negative reaction from the delta. And the last support is broken. That was signal number one that there is a passive seller here defending the bottom of this delta. Signal number two, we can see that buyers made a formal attempt to defend and become aggressive. They were halted in their tracks. We see a failure swing high where price failed to take price into a new A to B move. And instead, again, effort versus result, we see buyers throw up some effort, throw up some volume, and then that's instantly engulfed by sellers. And so now, same thing that we just annotated on the 15-minute time frame, right? Remember, let's go back just to show you all that they're making the same patterns on the 15-minute that they're now making on the 1 minute. What did London session do? Look at this price action. We swept the high and we made new structure lows. Price took out two previous bases, making a new A to B move, and we broke the 50 EMA on the 15-minute. Once we came back up into the bottom of the delta, let's go back down to the 1 minute, you see the same exact pattern, right? So right after the New York session open, price comes and trades up into the delta. We see highs. After those highs are taken, we see a negative reaction from the delta and supports are broken. We see buyers make an attempt to absorb that sell volume. They fail and they do not make a new swing high. Instead, we see a stop of buyers right in their tracks, buyers getting trapped, and then we instantly see the same pattern that we saw on the 15-minute time frame. Supports are broken after a high is swept. We see previous bases broken and the 50 EMA broken. That to me was like instant sells, right? So now that we're seeing the same pattern that we saw on the 15-minute, the higher time frame, we're seeing it now on the 1 minute. This gives us the green light to expose our capital. And so after this pullback, here's the 1. The break of this support was the 2. Here's the 3, or the retracement, taking your fib from the high of the 1 down to the base of the 2. You can see price came straight back up into the 70% gold retracement zone. Now, for me personally, I like to wait for confirmation, so I did not aggressively enter here in this area at the 3. I like to wait for price to trade back below bearish candles, or excuse me, back below bullish candlesticks. And I wanted to see price back below the 50 EMA. So with that in mind, I simply just set a sell stop beneath this base under the anticipation that if sellers are in control, and if this is going to be a three that's going to lead to a new leg to the downside, we're likely going to see price action at least target the dark pool or the low from the New York session open. And so sure enough, after we see sellers come back in defending at these highs, we have a triple moving average crossover. The sellers become aggressive. My stops, my sell stops were hit right underneath of this base. My original stop loss, as soon as the trade was entered, was right above the high. As price converged and broke beneath the last low, I simply tightened up my stops right above the 50 EMA. And then I just simply sat and I waited to see how price reacted at the dark pool. That leads me into the secondary position that I entered into. Okay. So same thing, same concepts, except now we're operating beneath the triple EMA crossover. Here we can see another delta held pattern. Here we see buyers make a formal attempt to absorb the sell volume and they fail miserably. How can we see that? Again, interpreting some of the information that the market's telling us. Number one, look at the buy volume candle. It does not engulf the sell volume, nor does it engulf two previous bearish structure highs. The second thing is it does not engulf not only all three EMAs, but it doesn't even engulf one. So we see the buy volume spike up into the 8 EMA and instantly shoot back down. So we can assume that this is buyers getting trapped, making a new lower high in comparison to the previous one and making a new lower low. So now we have a new one. Here's your new one, a break of support. Here's your new two. And so all I was simply doing to catch this secondary position was I took my fib. I personally don't do this in real time. I kind of just do it mentally from the high down to the low. And you can see price came straight up into that 79% sweet spot. I executed the trade with a market execution there, and I rode this trade down into the New York session lows, targeting the 3,600. Where in the chat, if we go to the chat, now to the buys, I was telling you all, if buyers can defend and stay above the 3,600, we could see a recovery. However, if sellers break the 3,600, it's game over for buyers. I'm paying attention to how buyers react as we are coming into New York session discounts from yesterday. So now you guys can kind of see why I was taking these buy positions. Now that we have seen the sells into what I thought was going to be buys, after price came down into my higher time frame discount area, which if we zoom back out to the higher time frame, we go back to the 15-minute. Why I was giving you guys that 3,600 level is because it aligned with where price had converged on the 15-minute from yesterday's New York session buys. The 3,600 level right here was exactly where that wick came into play, where buyers trapped sellers and became aggressive enough to make this bullish move. So if buyers were going to defend from this level, they were likely going to do it in this area. So once price came into that AOI on the seconds chart, now going over my buy positions, I understood that if we did not start to see a break of previous bearish structures, that the overall trend for the day was likely to the downside. But nonetheless, in this area, after we saw the reaction from the 3,600, we see the buy confluences. So jumping down to the 15 seconds chart. Okay. We can see this bullish move. The only thing that I would say about this bullish move is it did not break the 50 EMA. So I did enter into this move a bit prematurely, but nonetheless, I did it because we were operating at a 15-minute discount, right? However, after we broke above two EMAs, that gave me the green light to say, okay, we've now violated two previous bearish structure highs. So here's the first one. Second one, we sweep the low and we make new structure. So taking this new structure from now A to B, I was looking at the potential of this being a reversal pattern. So once price started to pull back into my discounted areas, as we know, now that price has made a new structure, if buyers are going to attempt to push price higher, they're going to make one of three patterns: a small retracement, to retest the previous resistance and turn it into support. A medium retracement, which is kind of what they did today, or a deep retracement to test the strength of the buyers, possibly underneath the low or at the low. And so once price started to pull back, I simply just trailed these bearish candlesticks with a buy stop. That buy stop was executed right here on this bullish candle. I simply put my stop loss nice and tight beneath the bearish candle under the anticipation that if buyers were going to hold this level, they needed to at least hold above the buy volume. And so sure enough, after that, you can see sellers came in, tried to make a formal attempt to defend. They failed. Buyers held at the EMAs, and we continued to make higher highs and higher lows. Now, for me, I completely closed out of this trade after price made a failure swing high right here. Under the anticipation that this was likely just profit taking from the sellers, and we were unable to break higher time frame structures. So had these buys broken above these two resistances and broken back above the dark pool, I would have held this trade. But instead, once we came up into sell walls, we started to create the same exact formation and pattern that we did at the sell delta. You can see a high is taken. After the last base, a new low is made. Now this is the new range. We can see that it was retested. Buyers were not able to break the range. That would have allowed me to hold this trade. Instead, we created a lower high. I closed the trade right there. And sure enough, we continued with the overall downtrend. Right? So those were my sells into buys. And that was it for the day. Right? I was done after that. I was like, cool, I'm not going to chase the market. The risk to reward to continue to sell in this environment for the higher time frame stop loss is kind of skewed now. Because if I was taking sells in this area, albeit they would have played out in my favor, the higher time frame areas of interest to place my stop losses were above these highs. So for me, that was too much of a risk to reward thrown off, not in my favor, right? So that was it for the day. Those are my sell to buy positions. That's why I was taking the sells today at the beginning of New York session, then flipping and reversing my bias and taking the buys under an anticipation that if buyers were going to make some formal attempt to defend, they were likely going to do it from New York session positions from yesterday. It's interesting to see now in real time. I had also marked off this area, which was an Asia session low from the other day, and now we're seeing buyers step in from this level. But nonetheless, right, coming back up here, all right, I want to focus on the loss that was taken today in this area at the onset of New York session, keeping in mind that having these deltas and dark pools on your charts and watching how price reacts to these levels is of key importance, all right? So we're going to come in here, and we're going to take a look at this out here today, because again, it's not a loss if you learn from it, all right? So right at the onset of the New York session open, all right, albeit this was a good buy scalp on the lower time frames, we have to now zoom out and see how price was reacting on the higher time frame. So the L today that was taken was traded in this area after the 8:30 a.m. open. I don't know exactly where the entry was, but it was some here in this area, somewhere in this area, right? And it resulted in, obviously, of course, the trade not coming into fruition. So again, starting from the higher time frame, you always want to ask yourself these questions. If I'm going to be a buyer, what do I need to see? If I'm going to be a seller, what do I need to see? And so because on the 15-minute time frame, right, prior to the New York session, I wish there was a rewind tool on Top Step. So if I was to retrace all this price action, here's the 8:30 a.m. open candle, okay? We see coming into the New York session open, two previous bases have been violated. So sellers, for a fact, at the beginning of New York session, were in control. We see a high taken, and we see new lows made in comparison to where previous bases were held. So now, coming into this New York session, for asset owner who was buying in this area, all right, we would have only wanted to buy if, number one, we saw the 50 EMA on the 15 minute act as a support. That would have been confluence maybe number one, because again, we would have seen the moving averages on the 15 minute cross over to the upside. The second thing that I'd have been looking for, as that would have been the first confirmation, not the pull the trigger confirmation, just one of the first buy confluences that we would have ideally liked to see. We would like to see some of the bearish volume, which we can see here, bearish engulfing candle that broke previous support, bearish engulfing candle that led to the break of support. We would want to see buy volume engulf that area. Why? Watch this. So remember, these candlestick highs, we're going to highlight them. On the lower time frame, what are they going to translate to? Structure, right? So remember, before we buy, we want to see a break in structure to the upside of at least two previous bearish lower highs. So we'll jump down to the lower time frame. Okay. You can see how this bullish reaction did not engulf 15-minute order flow, right? So ideally, we would have at least wanted to see buyers engulf this high, and that would have also coexisted with our last confluence of buyers starting to actually trade inside the delta, which we did not get. So there were no buy confluences today. Sellers were, in my personal opinion, very clearly in control until buy volume came back in and showed otherwise. So again, remember, every time you're coming into the session, start asking yourself, if I'm going to buy, what do I need to see? Set those parameters up for yourself. Inversely, same thing. If I'm going to sell, what parameters do I need to see? Once those things are met, don't hesitate, react to that information, right? So hopefully that kind of breaks down today while you were on the wrong side of the market, albeit I can give you some feedback to say that on the lower time frames, this could have definitely been misconstrued as a buy. Why? Because we see the market maker pattern here. We see a low taken. We see a new high made. Price comes back into the base. And this is most likely why you executed the position, right? Trying to attempt to catch the reversal. However, again, remember, when you're buying on the lower time frames or when you're selling on the lower time frames, always zoom out and make sure that you have confirmation on time frames that you're trading above. So if you're on the 30 seconds, get confirmation on the 1 minute to 5 minute. If you're on the 5 minute, get confirmation on the 15 minute, so on and so forth before you pull the trigger. All right. If you're taking your trades based off of only what the lower time frame is telling you, then you're most likely going to get caught in a position that doesn't work out in your favor. The times that it'll work out in your favor are going to be a lot less than the times when they will work out in your favor. All right. So again, remember these yellow lines, what are they? They're the 15-minute candlesticks. They're the 15-minute bearish candlesticks. So let's just get rid of all this real fast. Okay. Let's get rid of all the drawings and let's just focus on these yellow lines that we highlighted, which were the tops of the 15-minute bearish candles. So the first 15-minute bearish candle is from here down to here, right? The second 15-minute bearish candle is from here down to here, right? So we would have ideally liked to seen price action trade above this area of interest and turn it into support. And then we could have started anticipating buys. The last area of interest we would have ideally liked to see is we would have liked to seen this last 15-minute bearish candle engulfed with buy volume. And then once we saw that, something like this, right? Then we can start to say, okay, great. Now we can take buy positions. Right? Now we can take buy setups because now the volume is in favor of buyers. Right? But not until 15-minute volume has been engulfed. Because prior to all of this, buy volume over here had been engulfed by sell volume. Right? So now looking back, you can kind of see where you might have gone wrong. All right. Anybody have any questions from today's trade breakdown or want to break down their positions or ask about what I was seeing in the market today with this breakdown from top down? Is anybody confused on price action today? Go ahead,
So,
Chris.
quick question. Oh, sorry.
Hey, what's up, man? Hey, I was just curious, and maybe you touched on it and I missed it. Um, so I was targeting the reaction from the Asia lows, and so I think that was pretty close to where SB1 was kind of maybe targeting his long from, and so I rode that low up, and my plan was to get short below that, if that didn't hold, and that was kind of my morning thesis. Um, I guess kind of assuming that the buying momentum was going to pick up from yesterday. But I guess not putting as much weight on the immediate sells from the 15-minute chart that was coming through. So I was kind of expecting that to put a floor in the market, and it kind of did. That was where my most profitable position was from taking that long. And then I missed switching the thesis to the sell. I was just happy because lately I've been struggling trying to catch that first thesis. So this was going back to back. So, um, but anyways, yeah, I was just curious if that played, um, if you were kind of expecting a reaction there, or if you were just kind of ignoring that area, or what.
You're muted, Cypress.
Nothing. I was just saying these are the Asia session lows that he's talking about, and I was anticipating a possible reversal from this area. But nonetheless, remember that on any given time frame that you're operating on, when a new structure formation is made, you have to see volume come in and engulf previous structures, at least two. I try to look for at least two previous structures that led to that new structure break. So just let me again highlight this for y'all so you can use this next time. We can see that right at the open, this is the 8:30 a.m. candle. Look at this wick. Okay. We can see that this wick violates all of the Asia session lows. So that to us instantly should say not buy at this level because we think that the market's going to reverse. We should instantly say to ourselves that buyers failed to hold this level and it was given up by sellers who had enough momentum to break buyers, right? Because price would not have gone below Asia session lows had buyers held price at this level. So after that happens, your first thought should not be, oh, I'm going to catch a reversal. Your first thought should be, if I'm going to buy, I need to see structure that led to this move broken. And so that's where I started to come in and I started to pay attention to those if I'm going to be a buyer, because I was anticipating some buys today, not going to lie. But if I'm going to be a buyer, I want to see a certain set of things happen now that the market has told us that sellers are in control. Buyers were in control here, but now we can see that those buyers have been broken. So now that sellers have shown their hand, if I'm going to be a buyer, I'm not going to guess that we're going to see a reaction from this level. I want to see confirmation. So that's where I started to throw in. I want to see price first above the 50 EMA. Second, I want to see price above 15-minute bearish volume. So this was the first massive bearish volume candlestick that led to this break of structure here. This was the second bearish candle that led to this break in structure here. So for me, before I bought today, I wanted to see price trade above the 50, trade above these session highs, and trade back into the delta. And that for me would have been confirmation for over somewhere to the right-hand side to start to look for buy scalps, right? And because we didn't get that, I was anticipating that sellers had enough volume to break previous bases. So whenever that happens, trade with that mindset, not with the, oh, I'm going to catch the bottom of a move mindset or the top of a move mindset. Trade in tandem with what the current market information is telling you, not what you're anticipating happening, if that makes sense. I don't know if that was Tony or Chris that asked that question, but hopefully that kind of helps.
Yeah, that was me. I appreciate that. Yeah, I've been working to try to make my thesis match yours in the morning. and that bit's helpful as far as the immediate move that happened that was reversed before we got to that level. I didn't place enough weight on that immediate move, and I was still kind of focused on, the previous where Asia had kind of bottomed. So that's helpful, man. Appreciate it.
Now, so here's the price action. This is what I'm trying to convey to you all in the mindset, right? Think about it, right? So we had buyers in control. Yesterday was euphoric, and I can't blame anybody today thinking that we were going to see continuations in the buys because fundamentally, because of yesterday's euphoria, we would definitely think that. We would anticipate that as retail investors. But we always have to remember that our anticipation 9 times out of 10 is not what the market's actually telling us. And instead, we really got to dial in on what the market is telling us. So Scalper puts this in his, I'm pretty sure there's a document that goes over this, where after we see buy volume engulfed by sell volume, which this is the exact price action that we saw today, even though it was just by a little tiny wick, right? We want to start to see that sell volume that engulfed this buy volume re-engulfed by buyers before we buy. We don't just want to guess that the market's going to give us this, right? We want to start to see previous supports that have acted as resistances turn back into supports. So again, the first confluence would have been a move like this, turning previous support back into support, which leads to a new higher high, higher low, higher high formation. Once we got something like this today, where we broke back above the previous sellers here, that had enough volume to break previous supports, and then the strength of those sellers was tested. So buyers came up, tested the strength of those sellers, and sellers weren't able to passively defend and push price back down. Once that area where previous sellers were aggressive enough to break supports started to act as a support again, now that we have this confirmation and we have new structure, now we can look for buys over to the left-hand side or right-hand side, right? But we need that confirmation. We need that shift in momentum so that way we're not just assuming a bottom. And instead, we're getting confirmation that buyers are back in control. Right? You see what I'm saying? Do you see the difference?
Yeah, 100%. And I think that's a big point as well, because I was looking for and following kind of the confirmation on the time frame, right, which is okay because I was able to get a decent entry and I was able to start knocking out some profits, but I wasn't again placing enough emphasis on that. I didn't give enough time for the 15-minute structure to build and to show its hand that was confirming that the 15-minute was changing direction.
Yep. I would say another two, the biggest confirmation today for the
I
sells.
love you.
The biggest confirmation today for the sells was when we came back up and we retested the bottom of this delta. Guys and gals, if you ever see a delta where, hold on, first of all, let me combine. If you ever see a dark pool in the middle of a delta, remember I've told you guys that if price comes into the middle of a delta and doesn't push through it aggressively, right, instantly think that buyer strength at lower prices is going to be tested, right? So that was like one of the first things that I was thinking today. We had a dark pool aligning with the middle of a delta, and that led to a huge bearish reaction. Then at the beginning of the session, when we came up and we retested the bottom of the delta, and then jumping down to the lower time frame where we can see that retest again, think effort versus result. That's why we have these deltas. Instantly, when you see effort, so here, look at all this buy volume, all this effort, right? We have buyers above a 50 EMA. This buy volume, if it was buy volume worth paying attention to, should have shot straight through the delta, right? Creating a new structure formation at the bottom of the delta. And then after we see that, we want to see buyers hold the bottom of the delta or start to consolidate inside the delta at the bottom. That signals to us that buyers are defending this delta. However, we don't see that. We instantly see rejections. Buyers come in, boom, price rejects, makes a new structure low. We see buyers come back in again, boom, instantly make a new structure low. Buyers come in again, instantly make a new structure low, right? And all of that happened right at the bottom of the delta, right? So buying in this area at the onset of New York session, or this area here, which would have been the last good RR for little tiny buy scalps, you should have instantly been thinking to yourself, okay, if sellers are defending the dark pool, where are they going to come and where are they going to attempt to test the strength of buyers at? The bases. So that means your stop losses are going to be the targets if sellers are in control. And clear as day, they were showing that they were here. It's all good. Good learning lessons today. Today's price action was a very good learning lesson. It was very good to see how price reacts to these deltas. And again, just making sure that you're asking yourself the questions before you buy. What do I need to see before I buy? And making sure that you don't buy or sell before you see those things. Practicing patience, practicing discipline, and just really confirming with yourself that you're seeing the things that you need to see before you execute positions. All right. Tony, go ahead. You had a question after Chris.